So good afternoon. I'm with Rhodri Llewellyn. So Rhodri is director of Axial Capital Partners. I've met Rhodri a number of times at my recent property meets. Well, I say recent property meets. I've been hosting property meets for quite some time, and I've met Rhodri at a number of those meets. So Rhodri, huge thanks for you taking time out this afternoon. It's a
Thanks for
really
having me.
interesting time post-Brexit or post 23rd, 24th of June, and we're going to go into a number of questions about lending and where you see the market going, and your own position on the market as well, and what you are possibly doing differently. And first of all, let's explain what Axial Capital Partners is all about.
Okay, sure. So we focus essentially on working with property developers. So it's finding the right funding for projects that have the short to medium term lifespan, really. And the philosophy is basically that people might have some really good experience, might have a really good deal to work on, and not the greatest level of equity to go into that project. If they go to a traditional bank, then they're not going to get the full funding that they need. So we work on putting together structured funding where we may bring in private investment alongside that. And so good deals that will work can still come together, even if the developer doesn't have the full degree of equity that a bank might require, for example.
Sure. And in terms of your story, Rhodri, how have you come into the property arena? I know you for quite a while, but for those listeners who haven't met you before, what made you get into property? Why did you think property was the most important investment class to be involved in?
That goes back a long way to my family, I suppose. It's something that my family have always done. So when you grow up in that sort of environment where property did really underpin a lot of what my family and their business did, it was something that I was generally exposed to. I then went down the road of studying and working in the finance sector, and really have brought the two together. It's something that many of us do enjoy being a part of anyway, but it was always there for me, I suppose.
Sure. And since you've been investing, things have changed dramatically, particularly with regard to the alternative finance section. We were discussing before during this interview whether in a few years' time people will be calling it the alternative finance section or alternative lending, because it's becoming much more mainstream. It's becoming much more of a choice for all different types of investor level. So I know it's one piece of property software you look at, alternative lending. Can you just let the listeners know a little bit more about what type of software packages you've looked at using or have used in the past and still do use?
Well, as far as it being called a software package particularly, I wouldn't so much say that, but as you alluded to, it is the online platform. So similar to the platform that we operate under interim permissions right now, crowdestates.com. There's others that I also personally invest through, such as ThinCats. Now they, as I said, are not so much software, but it is an online facility. The fact that it has now, to a degree, cut out the traditional intermediary aspect of lending, and it has brought borrowers and lenders on the debt basis, or investors and those looking for the equity contribution on the equity side. It's brought them together through very up-to-date technological means. And for me, I do see that as certainly being part of how the alternative finance sector is really going to further develop going forward. As you said, it's already become a large sector, and I only see it getting bigger, frankly. The fact that it has picked up a lot of the slack where the banks have moved away over the previous 1 to 3 years, really. That's where the alternative finance sector has really found its niche, especially over the last 3 or 4 years, and will continue to grow as far as I can see.
Sure. We were discussing some terms before, and unless you're versed in alternative finance, you may have not heard of the secondary market. So do you want to just explain? And I know you do look at a number of different platforms as well. So what makes you choose one platform over another?
That, I would say, is certainly a personal choice. For me, because I do look to put money in to an investment through one of those platforms, but I do have it in mind that I may want to trade out of that position within a time period that is shorter than the initially prescribed loan period. If that loan, for example, is set over 12 months, but after 6 months I decide I need to get that money out or I want to shift it somewhere else, then having that facility of a secondary market on the platform is something quite helpful. It's essentially a very miniature stock exchange where you can put your part, if it's peer-to-peer debt, for example, you can put your part of the loan up on that secondary market and look to sell it to somebody else. Now, very few platforms have successfully built up a secondary market that is active enough to really be of help to investors. FinCats, I do think, is one that's doing quite well. Another one I have picked up recently has had problems with theirs. So it does show that there are some issues still with the technology side of these things. But then other investors may look at the longer term investments. They want to find one investment that they like. They do their due diligence on it. They want to stick with it for the entire period. And therefore a secondary market to them isn't relevant. And all of the platforms can then offer something worthwhile to them.
Sure. What advice though would you give someone who's looking, at alternative funding in terms of where do they start? What's the most important criteria for you? Is the most important criteria, apart from does this deal stack up, does it have secondary market, or what other criteria would you be looking at as well in terms of an alternative funding platform?
That again would be driven by personal circumstance and personal preferences. For me, again, being in the property space, I do tend to look at investment opportunities where it is either backed by property or is directly based on property development. For example, I can then look at who is behind that loan. I prefer loans where I can do that, so I can do my own due diligence then, looking at details of the directors through, say, duedil.com, or looking at any other directorships they might hold and outstanding charges against those companies. So it's a broader due diligence process that I personally like to be able to conduct. I also would look at companies who raise funds through these platforms and use it to lend on in, say, a bridging capacity. So again, it's backed by property.
Sure.
And that will then come down to anybody's personal preference. They might know other sectors much better than I do, and they can do their own due diligence much better in that respect.
Okay. Now with regard to the lending levels, because different platforms have got different levels of investment, where does your platform start, Rhodri?
So we currently look to work with people who are investing a minimum of £10,000. Again, this is all debt based, so that is loan parts against each borrower's overall loan. We will remain at that level for some time to come yet. It gives us a chance to work on a more personal level with every investor that comes through.
Sure. And in terms of portfolio and gearing, what's your views on gearing?
Gearing, I personally believe, again, coming from a finance background, it's something that I understand, and I believe in healthy gearing. It needs to be used carefully. Plenty of people, as we know, if you look at the very simple level of the buy-to-let market, people were caught out in terms of using highly leveraged interest-only mortgages and caught out during the crash by a negative equity position. So gearing, yes, I believe can be used very well. If it is sustainable, then it gives you opportunity to keep using whatever pool of equity you have over and beyond simply one investment. So I think it's a case of people getting to understand how they can use debt to the greatest effect, but also how to manage it effectively. And yeah, that's really what a lot of growth in today's markets are based on, is debt, isn't it? When you look at what banks do, banks hold a very small level of capital to meet capital adequacy requirements, and the rest of it, essentially, they're on a debt basis, borrowing money from depositors and putting that out as for example, loan funds. But they are essentially very highly geared because of that.
And looking at the purchasing criteria since Brexit and since other things this year, it's not just Brexit, since tax changes as well, has your purchasing criteria changed?
Yes, in terms of where I've been looking for property and what I want that property to do for me. I would also say that that's broader, really, when some of the investors that we talk with have really shown, even in the lead up to the referendum, there was rhetoric around changing criteria as far as where they will look to place money. There was quite a shift out of those prime or core London, central London areas, and it shifted quite quickly to somewhere further toward the M25, and then quite quickly after the referendum to, well, now we'll start to look at Birmingham, and we'll look at Bristol. So I personally have taken a view that look for markets where there has been less movement, really, in values, because we do still see things to come. Article 50 still got to be triggered, and we do have to potentially detach from Europe. Now, those things haven't happened yet, so the markets may well be in for further movement. So being somewhere where the property market is less inclined to react to those changes, to me, that's a bit of a safer bet. And if I can see a way to produce strong yields while I'm holding property there, then all the better, really.
In terms of the strategies, there's so many different strategies out there. There's rent to rent, the buy to rent. We were talking about build to rent as well, and flipping. If someone's starting out today, what strategy do you recommend them looking at?
I have seen a number of people trying to get into the industry, trying different things, and when they're not particularly experienced, then they can be caught out and not really understand what went wrong. I generally tend to tell people when they say to me, right, I've got some money, I'm thinking about doing a course or, putting my money somewhere because I want to quickly learn all the secrets to making money from property. I generally say to them, find somebody who is looking to do some sort of a joint venture perhaps, or to work with somebody where you can get hands-on, potentially put your money in, you'll learn on the ground with that more experienced partner, and if it is, say, on a joint venture basis, you'll aim to get your money back, potentially even with a profit. So in my view, that is a great way to get a start. Find somebody experienced, work with them.
Sure. Well, what about the due diligence in finding a joint venture partner? So what would you recommend them do?
I mean, that obviously is or has been a dynamic landscape with various FCA policies coming out. Now, it is a case of ensuring that you're working with somebody who understands what the policies are around joint ventures, that you need to meet certain criteria. Um, and if you can do that, then I would say from the more practical perspective, it's a case of finding somebody who you can get references on and understand that they do have a background, that they can show you a record of what they've done. You can be clear when you work out an agreement with that person on what each person is going to be contributing, what the expectations are, time and money wise, what the expectations are at the exit of that as well. And make sure that you've got a solid legally binding agreement in there that you understand.
Sure. Rhodri, I just want to say huge thanks for you taking some time out this afternoon. To the listeners, I've met Rhodri at a number of different events which I organise. So I organise the Central London morning property meets, the evening meets in Central London, also Wandsworth property meet. And I would say the Central London property morning meet has a slightly different audience to the evening meet, attracts more property professionals in terms of solicitors, architects, and the wide spectrum. The evening meets are more investor-led in terms of those who attend, but sometimes it can change as well. Rhodri, I just want to give the listeners my easiest way to connect with me, myself, at Brendan_Quinn UK via Twitter, or meetup.com/Central London Property Network with over 900 plus members. What's the best way for people to get in touch with you, Rhodri?
Either via email, rodri@axialcapital.co.uk, or certainly look for me on LinkedIn, Rhodri Llewellyn on LinkedIn. I think I'm the only one.
Okay, brilliant. I just want to say huge thanks for your time this afternoon, Rhodri, and I'm sure we can speak soon.
Yes, great. I hope so.
Thank you. Bye for the moment.
Bye-bye.